Good afternoon, everyone. I will be projecting a presentation. The main idea behind our presentation is that even though COVID-19 has been a challenging situation for the whole world, I think that it could brew some opportunities, particularly for the mining sector in Latin America. And I think this is something that it's particularly could be very specific to this sector, and it's not really so widespread in terms of the economic, in terms of the unexpected economic impact of COVID-19 economic-wise. So these are the main topics I would like to discuss, and that's basically why I have I think that this could be actually a blessing in disguise. First of all, we have a massive buildup of liquidity, of international liquidity, a low for longer interest rates environment that is very likely going to lead to a much weaker dollar. And as I said before, lower interest rates, which are going to propel, to boost liquid portfolio and FDI inflows into Latin America and other regions of the world, but particularly into Latin America, very likely. On the other hand, we had, as it was discussed in the publication James mentioned in this excellent report, there was an impact of COVID on costs, on mining costs, due to the fact that you needed to adequate protocols in order to protect the health of miners. And of course, you had the lockdown. But as activities resuming and the protocols are being put in place, I mean, this is leading to higher costs. The good side of the story is that prices, and that is a consequence of, another important consequence of the massive buildup of liquidity, commodity prices and metal prices are on the rise. And coupled with the competitive edge of mining in Latin America, this temporary shock, negative shock on costs could be somewhat cushioned. And then finally, the big opportunity, I think, lies in the fact that we could expect a reduction in mining and social conflicts, which has been a trademark in terms of hindering mining in Latin America for many, many years, particularly in Peru. So I would say that overall, even though COVID has been a disaster health-wise, and it has had a tremendous and appalling human cost in terms of lives, and also in terms of foregone output and activity and rising poverty, I think that at least there is a positive side to it in the sense that it could be brewing an opportunity for mining. So let me develop these points in order. First of all, I would like to, as we all know, it's very well established, but I would like to highlight the importance of mining for Latin America. As we see, mining in Latin America in terms of the overall share of production in the world. As we can see, copper is heavily dominated by a production in two main countries in Latin America, Chile and Peru. We also have with 40% of total production share. We also have a high participation of zinc output, particularly in Peru. The total amount of zinc produced in Latin America is 20% of the global share. Then of gold, it's 12%, it's a little bit lower, but there we also have Peru as an important player, and Mexico. Then we also have silver as the importance of with Latin America explaining half of the global share of output, and then 20% of zinc, where Brazil, iron ore, where Brazil has the main production role. As I was saying earlier, we see here that the COVID crisis led to an enormous spike in risk aversion, which is represented by the blue line, the VIX index, which is the volatility implicit in options in the Chicago Exchange Board, and also it has led, as a result of the stimulus and the monetary measures taken by the central banks, to a depreciation of the dollar that we are seeing now. It is at this point, it seems to be on a standstill. We think, our house view is that this massive liquidity that it's building up is going to lead to further depreciation of the USD, and that is going to bode well for commodity prices, as has been the historical impact in terms of what an excess liquidity, global liquidity, what has led to, what has meant in terms of commodity prices. So we see here, in terms of metal prices, that most metals are trading up relative to their December 19 level. So in this chart, we see that all the different prices are based as an index with a 100, with a base of in December 2019. So basically all of the commodity prices after metal prices, after declining earlier in the year when there was this massive meltdown in valuations and the sharp spike in risk aversion, they have recovered. But another interesting feature, and I think this is the most important, is that prices are relatively high in terms of historical levels. And I think that this slide is showing that. As a result of this, and if we could expect a further upside on prices, this is going to bode well for, as I said before, for investment in the region, and particularly in what is in regards of mining, given that, as I said, the region has a sharp competitive edge in terms of mining. So I think that the outlook from the point of view of external variables is rather good, and it bodes well for the future of mining in Latin America. So this is an important slide because, as I said before, I think mining has a competitive edge in LatAm, and we see this where this competitive edge is to a large extent concentrated in Peru, and also in Ecuador, as a result of low energy prices. I mean, Peru has huge gas fields in the Camisea region, and also the cost of electricity is relatively low. But as we see in the table to the right, there is still an issue with taxes. Taxes are very high. The tax burden on mining is still very high, and it's something that it will probably need to be revisited going forward. And this is clear from this slide. This is the Fraser, sorry, not yet. This is a Fraser, this is about the competitive edge. This is a Fraser Institute Attractiveness Index, where you see that there has been an important progress in terms of mining in Latin America as a result of the better institutions that have been put in place in many countries throughout the late 1980s and throughout the 1990s, I mean, and the early 2000s. I mean, there were reforms, macroeconomic reforms, that allowed for many countries in the region to leave behind a past of constant macroeconomic and balance of payment crisis, and this has led to an overhaul in terms of the policy perception and in terms of the general attractiveness of investing in the region. But as I said earlier, we see that in terms of countries' tax regimes, the tax regimes are not seen as encouraging investment, and this is clear from this in this chart to the left, where the blue segment represents how respondents to this survey have assessed the tax regime in each of the countries. So as you can see, the blue line it means that the perception is that the tax regime is not a deterrent to investment, but it doesn't encourage it either, which is the gray line. The gray segment of the bar is actually where the share of respondents who think that the tax regime encourages investment. So as you can see, the blue line dominates in almost every country the gray segment. So this basically means that even that investors have a kind of a neutral assessment about the stance of the tax regime regarding its investment friendliness. I think we should move forward to, given that Latin America has a huge potential in terms of resources, both proven and that are potential resources. I think that it would be a good idea to simplify and reduce red tape and reduce taxation in order to foster investment. So basically, these slides are meant to show that which are the main production trends in terms of the different countries. I mean, Ecuador is a country where mining is not really that important from the point of view of output. Ecuador is mostly an oil country, but its reserve potential is huge, and pundits say that it could be one of the largest deposits of mineral wealth in Latin America. Peru is a country where mining is extremely important, and it accounts for around 60% of exports, and it's mostly concentrated in copper and gold. And also, here we have this little map where we basically show the possibilities of where the wealth potential in terms of reserves lies in Peru. So we see that gold, there are still vast regions where there is a possibility of finding huge gold mines that of a high law that haven't yet been completely and fully exploited. And Brazil, as I said before, it has an enormous potential in terms of iron ore. So the FDI, I think that this is an important thing, because FDI has been growing in terms of mining in Latin America throughout the commodity super cycle. But in the last few years, we have seen some fatigue in terms of FDI. So if we are right about this idea that there could be an upward surprise in prices, then FDI could begin to take off in Latin America, and particularly in the mining sector. This is another interesting slide, because as I said before, the number of M&As in Latin America in mining have shown a sustained decrease in the 2012-2018 period. But in the publication that James discussed earlier when he made his introduction, I mean, there were 120 M&As in mining throughout the first half of the year. So it seems like this activity and investment is starting to take off in mining in expectation of better profitability. So I think that this is an interesting early warning that makes it very interesting to put an eye on this sector and think about that it has enormous potential for development. So my final comment is going to go in the sense of how the macroeconomic situation in Latin America is likely to impact the social situation that it's very important in order to understand the future of mining in LatAm. This crisis of COVID will be the worst recession in 4 decades. And as we see on this chart, I mean, Latin America will fall by twice the pace of the decline of expected for the world by the IMF. And there have been sustained down and very deep downward revisions throughout the last few months. So for the world, growth is expected at -5%, and for Latin America it is -9.4%. where all of the countries will have a very heavy, will sustain a very heavy blow. And the not really very good news is that for next year, growth is expected to be, the recovery is expected to be relatively shallow. And this means that the negative output gaps will remain open, which means that potential GDP will be above observed GDP, and there will be an employment of production factors. And the important thing is that there are downside risks to this forecast related to the extent, to the duration of the pandemic. If the vaccine, it takes a lot of time to be developed and marketed in the region, this could be even, the recovery could even be slower. But there is the bright side of this is that we could think that social conflicts, which for a period were very significant, but began to trend downwards as from 2010, but we have seen a spike in the last few months, and I will go back to that in the next slide. I think that we could enter an era in which the resistance to social conflict that is holding back very important mining projects, for instance, in Peru, in Toromocho, which is a very large copper mine, it has been a major issue, and in Peru as well, the Las Congas gold mine has been, this project has been completely abandoned due to the resistance of the local communities to the ramping up gold production and the mine. And why do we have this resistance? Well, because the community sense that there is an environmental cost, which the mining companies have done a lot to in order to reduce through a higher investment, and this has been actually very good for the region. But still, as we see on this slide, there is still major social conflictivity, and the fact that we are heading to this protracted depression in terms of activity could allow for an abating of this social conflictivity, in my view, driven as well by the rising poverty indicators. So that is with this I conclude the presentation, and I will take questions at a later time. Thank you so much.